Hi. Just the other day, we had the 2022 policy address in Hong Kong. So what we're going to do today is just talk through it very quickly. Now, it was delivered on the 19th of October. There's quite a few measures in it. It's a very lengthy document. Here, I'm just focusing broadly on what affects my contacts and clients. Its aim is to promote economic growth, attract business, and quite key here is talent. Talent has featured within this policy address a number of times. The other key is the Greater Bay Area is mentioned more than once, and there's a clear focus on that integration and using the Greater Bay Area to further Hong Kong's business. So first of all, the top talent pass. Now, Singapore released similar a little while ago. Hong Kong's has different numbers, etc., but it's the same purpose. Essentially, those people at the top of their profession or nearing that, or are from the top universities, will receive a form of employment visa where they can come here, find employment, easily change employment, etc. The details of this are quite sparse, and no doubt the Immigration Department will go through them, but the keys that were set out was the annual salary being at or above 2.5 million Hong Kong dollars per annum in the past year. Now, that might need to be demonstrated. If someone hasn't been working, maybe they've been working for themselves or they've been a researcher or similar, they might not make that. So we also have this graduates from top 100 universities. I think here the devil is really going to be in the detail. However, some items that have come out are a general relaxation on the other immigration policies. So for example, for the general employment policy, which is what is typically used, kind of 9 out of 10 with my client, the need to show a local recruitment exercise, i.e. a justification why you need to hire someone from outside Hong Kong, is going to go away for key industries. Financial services is a key industry. The immigration arrangements for non-local graduates is going to be extended as well. So they'll get 2 years instead of 1, and that's going to be extended to various Greater Bay Area universities. So that will include, increase rather, the talent pool available for that scheme. Various other quotas and restrictions are also going to be suspended. That's all very positive news, and hopefully the last 2 years where immigration has been quite difficult, and I think mainly due to COVID restrictions and COVID issues within the kind of working of the Immigration Department, that's now coming fully around, and life will be a little bit easier. There's also something called a co-investment fund that's going to be made up. Now, this is actually money just moving from the future fund, 30 billion Hong Kong, to the co-investment fund. This is going to be used to co-invest in companies coming to Hong Kong. Again, the terms on this are quite light. There's been a little bit of media around this in the last few days. I think there's going to be a lot of requirements here, and this is by no means free money. This will be money that is going to have to be demonstrated to be shown to be contributing to Hong Kong's economy. So it will be hiring in Hong Kong or tech research in Hong Kong. A headcount thin, say, fintech company or insurance tech company in Hong Kong that maybe has outsourced a lot of its functions, its design development function, for example, may not be able to get very much of this money at all. That said, some of this money may filter into things like the Cyberport startup regime. So some very specific financial services measures. First of all, the main board listing rules. There's a proposal to revise those so that advanced tech companies without a profit history can go and be listed. There's a lot of encouragement around issuing RMB securities and potentially eliminating the stamp duty on those. There's a lot of talk about the implementation of mutual market access with various mainland cities. And this has been bandied out a number of times recently, trying to center Hong Kong as a carbon market. Now, what that means, I don't think anyone really knows at this point in time. I would think there will be government support for this kind of ESG carbon trading business as a whole, with a view of trying to pull in another listing regime as such, another market for that, at least across in Asia. Interestingly, there is talk also of tax concessions for family-owned investment holding vehicles, and the published aim is to attract 200 more family offices into Hong Kong. I think that's great news. That is definitely going to help the financial services sector in Hong Kong. And then lastly, there's a lot of different measures to encourage aviation and shipping asset holding companies. Now, they already have some elements of preferential tax treatment, but the plan is to increase those even further. There's something called the BUD Fund, which is the Branding, Upgrading, and Domestic Sales Fund. The ceiling of that is going to be raised from 6 million to 7 million for each company as such. Also, the SME Marketing Fund, the limit there will increase from 800,000 Hong Kong to 1 million Hong Kong. This is quite relevant to a number of clients within Hong Kong. And if you've had one of the loans under the loan guarantee scheme, the payment holiday for that is going to be extended up until July 2023. So that will be helpful for working capital. There's also various schemes that will launch. Details again are very sparse to help insure exports, credit guarantees, etc. There's a lot of these items that I think have become hard to obtain in the last 3 to 4 years. The government is going to start backing those, much like the UK government does, for example, to put in some form of government support so that a Hong Kong exporter can trade fairly in the international schemes. Some other items, there's going to be a plan to increase IP rights here and try and have some kind of IP trading platform here. Very interestingly, point 2 here is the government is planning to become fully digital or fully smart, be a smart city, and they're talking about a timeline for 2 or 3 years. I think in some departments that's great, and then that's already working. In others, that move to full digital, I think, will be quite challenging. Unfortunately, in Hong Kong, we do still have various forms that need to be submitted in paper, or indeed they ask you to submit what's already in their own system. Recently, we were doing some forms for a client, and the government department requested we provide them a certified copy of a certificate that they had actually sent us themselves. So that link up and that being smart digitally wise, I think might take longer than 2 to 3 years, but any improvement there will be a good improvement. University research teams, there's going to be funding available for them. And I think various funding is going to come out over the next 2 to 3 years around strategic businesses. So life technology, fintech, financial services. What that funding will be related to or required to go into, I don't know. But the tone from the policy address is very much these businesses, these strategic businesses are going to be supported. And that will be with money and legislative support. Insurers, for example, the plan is to move to a risk-based capital regime, which will obviously make a lot more sense. That's it. As more details come out or as these schemes launch, I'll do another video. But for now, that is it. As always, any questions, please let me know. Thank you.